Welcome to Megatrade 101's brief video presentation on transitioning from where the US dollar index came from and where it is now based on the week ending August 10th, 2018 on a technical perspective basis, where the US dollar index closed at 96.34 as indicated here on our first initial slide. As most of you are quite familiar with the chart formation here from our previous market presentations, but rather we would like to roll back from historical price movements where the US dollar index traded since June 3rd of 2017 is actually the basis of how we at Megatrade 101 approach technical analysis, and the approach differs from what is commonly applied in charting analysis. As you could see here, after briefly marking the 103.82 last January 2017, the US dollar index have made its halfway midpoint at the 96.66 mark as indicated here on the red color, where the technical chart and price formation described overall on the left side have shown two distinct signals on the way up to its record high and a turnaround price reversal on the way lower. As you could see, the disjoint angle here, as some would describe it as a megaphone shaped formation based on the prices that has a much wider price range. However, when prices entered a bearish diamond formation, which is the silhouette here, the signal have already confirmed its bearish tone, thus leading towards a following decline in the making shown on the next chart. This chart is more of a clean, and we have taken out the color coordinates of the megaphone, but however it is presenting the resistance lines, broken resistance lines and supports. And moving fast forward towards July of 2018 here, the dollar index had made a remarkable price recovery after marking rather, a low at 88.25 on February 16, 2018, and never did look back. The low price was actually very close to the major extended support line from the lowest price here at 75.24 basis point dated March 11, 2011, and as prices rolled, you could see that the higher bottoms are actually in shape. As prices have been rolling over the 95 here at this level, 95.0510 level range, the US dollar have already signified its intention of moving higher in line with the Federal Reserve Bank's guidance of raising interest rates at this time, alongside with other fundamental factors supporting the US dollar's resiliency surrounding the market. However, we would like to stress that another technical guide being applied on this chart is the Fibonacci pitchfork, which is indicated here, that has been overlaid with the price extension of its support and resistance levels. As a reminder, the wide trading range from its high and low significantly would remain high after the major sell-off, which is indicated here, and after the price recovery that we are actually seeing now as we enter the third quarter trading of 2018. Now, with that said, after looking at it on a bigger perspective, which brings us also to the current chart formation here, which has been compartmentalized. Rather, the US dollar index as of the end of the week of August 10th, 2018. Trend following the US dollar index close to its price accuracy projection is being shown here after taking into consideration the bigger picture, both monthly and weekly formations. The next process is to dissect, which is indicated here, more on a zooming in into its compartments that best describes the price behavior and movements. This would derive a near accurate price objective as indicated or circled here prior to when it was reached, the accurate price objective which forms the next procedure to follow, and the technical approach that suits the US dollar index amongst other lagging indicators, which closely defines the trajectory, which is actually an up movement, using the May to August as a basis of the trend regression. Statistical models applied where regression analysis is a process of comparing prices and movements in relationship among variable components. What this means is the components of the US dollar index, like the euro, the pound, Swiss francs, Japanese yen, all of them has their own weightings and percentage of distribution that comprises the overall US dollar index, and their corresponding weightings and percentage are important. Thus, at this point in time, we would like to stress that how we derive this, we would be able to discuss it with you on a one-on-one session if you'd care to know. However, hope that this short or brief presentation would help derive a better understanding on how we have approached the dollar index, looking at it more on a technical perspective rather, and be able to make the right trading decision, staying on the course as far as the US dollar index, and wait for the next turnaround. Again, thank you so much for taking time watching our shared information on US dollar index, where we only wish you the best of trades and actually trading for the right reasons with MegaTrade 101. Have a good day.